Cash flow statements. Cash flow statement is a statement that shows the flow, that is inflow and outflow of cash and cash equivalents during the period under the report. Transactions that increase the cash and cash equivalents are inflows, whereas transactions that decrease the cash and cash equivalents are outflows. Cash and cash equivalents include cash on hand, bank balance, and marketable securities. Cash flow statement is prepared according to the Accounting Standard 3 as revised. The accounting standard prescribes that cash flow statement may be prepared either by direct method or by indirect method, showing cash flow under the three heads, namely cash flow from operating expenses, cash flow from investing activities, cash flow from financing activities. Cash flow statement by indirect method is prepared on the basis of financial statements, that is balance sheet and statement of profit and loss. Cash flows or inflows and outflows of cash and cash equivalents. Cash flow excludes movement between items that constitute cash and cash equivalents because they are a part of cash management of an enterprise rather than the part of its operating, investing, and financing activity. Examples of the transactions that are movements between items of cash and cash equivalents include cash withdrawn from the bank for business, cash deposited into the bank, that is cash in hand, sales or purchase of short-term marketable securities being cash equivalents. What are operating activities? Operating activities. Operating activities are the principal revenue producing activities of the enterprise and the other activities that are not investing and the financing activities. Examples of operating activities: receipts from sales of goods and services, receipts from royalties, fees and commission, receipts from trade receivables, receipts from purchase of goods and services, etc. Payment of trade payables, payment of wages, etc. Next is the investing activities. Investing activities. Investing activities are the acquisition and disposition of long-term assets and other investments that are not included in the cash equivalents. If you see, the examples of cash flow from investing activities are payments for purchase of fixed assets, receipts from sales of fixed assets, payments for purchase of securities, receipts from sales of securities, etc. What are the financing activities? If you see, financing activities is the last in all the three. Financing activities are nothing but the activities which result in change in size and composition of the owner's capital, including preference share capital in case of company and borrowings of the enterprises from other resources. For example, the cash flows of financing activities include proceeds from issue of shares and other similar instruments, proceeds from issue of debentures, buyback of equity shares, repayment of amount borrowed, including redemption of debentures, etc. What are the objectives of cash flow statements? Objectives of cash flow statements include short-term planning. Cash flow statements gives information about sources and application of cash and cash equivalents for a specific period. It helps in planning investments and assessing the financial requirements of the enterprise. Helps in assessing liquidity and solvency. Solvency is the ability of the enterprise to meet its liability on time. Cash flow statements help to assess liquidity. Efficient cash management. Cash flow statement gives information relating to surplus and deficit of cash. An enterprise therefore can decide between the short-term investments of the surplus and can arrange the short-term credit in case of deficit. A comparison of the actual cash flow with the budgeted cash flow of the year shows the extent to which cash and cash equivalents were generated and applied as per the plan. So if you see the reasons for cash position, cash flow statement shows the reason for lower and higher cash balances with the enterprise. Sometimes an enterprise has a lower balance in spite of higher profits or higher cash balance in spite of lower profits. Reasons for such situations can be analyzed with the help of cash flow statements. Cash flow statements also determine the sources of cash and cash equivalents under operating, investing, financing activity of the enterprises. What are the limitations of cash flow statement? Limitations of cash flow statement include non-cash transactions that are not shown. Cash flow statement shows only inflows and outflows of cash. It does not show non-cash transactions like purchase of building by issue of shares, debentures to the vendors, issue of bonus shares, etc. Not a substitute for an income statement. Income statement shows income of the enterprise based on the accrual basis of accounting, whereas cash flow statement shows only cash inflows and cash outflows, which does not represent net profit earned or loss incurred by the enterprise. Not a substitute for balance sheet. It is not a substitute for balance sheet because it does not show the financial position of the company. Assessment of liquidity. Liquidity of the enterprise cannot be determined by the cash flow statement alone because it depends on other factors like current assets, current liabilities, and cash equivalents is one of the most important components of the current assets. Accuracy of the cash flow statement. It is prepared from the financial statements. If the financial statements are not prepared properly and they are incorrect, cash flow statements will also be incorrect. What is the format of cash flow statement? Cash flow statement starts from operating activities and then it is continued by the investing activities and then the financing activities. Operating activities is started with a net profit before tax and then non-cash expenses are added and non-operating items are detected and then the operating profit will be occurring. Then the operating profit will be added along with our net investing activities, then the net financing activities. All together, put together, the cash flow statement will be formed. This is the final format of cash flow statements. Uh, Thank you.